Well, I think you need to look at the supply shock. Right now, we have a demand shock because of the ETFs. That's what's been driving price up. As you get to, and that's a demand shock to the tune of about 2,000 Bitcoin a day. If you look at the halving, we're going to go from having 900 newly minted Bitcoin a day to 450 a day. So you're taking the total new emissions of Bitcoin, if you would. The total supply that is being newly introduced on a daily basis will go down by 50%. We'll go to 450 Bitcoin. In a day when typically 4,000 to 5,000 Bitcoin are trading hands, a decrease of 450 in new supply will likely have some impact on price.
What do you think is happening? I mean, we saw Bitcoin get up to 70 something thousand dollars, drop down to $66,000. I was making the argument that it has been very tied to the NASDAQ, it's been very tied to the markets. And
Bitcoin slips after key economic data shows inflation just won't fade away.
Despite the hype, price of Bitcoin has fallen about 11% since then.
The price of Bitcoin itself has fallen to its lowest level since SEC approval, underperforming other asset classes.
In this video interview with David Lin, business executive and CEO of Marathon Digital Holdings, Fried Thiel discusses everything Bitcoin related from the ETFs to mining and the upcoming halving. Marathon is the largest mining company by market share, and as such, Fred's insights into the world of mining and Bitcoin by extension are top-notch. Fred is going to break down exactly why Bitcoin is poised to run up in the coming months and even potentially end this cycle above $250,000 per coin. He discusses the concept of a demand and supply shock and how he expects both factors to send the price of Bitcoin higher. Fred is known for never publicly making any predictions on Bitcoin's price, but he reacts to a prediction by ARK Invest CEO Cathie Woods, and he's in agreement that one Bitcoin could be worth as much as $1.5 million very soon.
Our bull case is $1.5 million by 2030.
He also discusses institutional and nation-state adoption of Bitcoin. Let's dive in to hear it all.
I think it's a combination of the ETF approval accelerating the normal cycle by about 6 months. So the uptick in the price of Bitcoin we would have seen in this fall, October, kind of late Q3, early Q4, was pulled forward by about 6 months. You're seeing a very interesting dynamic. The ETF has attracted capital that previously was invested in mining equity stocks, so stocks in companies like Marathon. Some of that flowed out of those stocks and into the ETFs. And then you also have considerable outflows. GBTC has seen almost 50% outflows of its original Bitcoin balance from when the ETFs launched. And so now you're now seeing significant outflows from GBTC, a lot of which has likely flown back into the other ETFs. You had a lot of people who bought shares in GBTC at 40% discount when Bitcoin was at $15,000 and $20,000, and now they're obviously monetizing that and then reinvesting some of those proceeds. But essentially what's happened is the normal Bitcoin cycle has moved forward by about 6 months. So I think we're going to see a kind of bumpy sideways road here around 70K. If Bitcoin breaks through 70K with strong momentum, then we may see another run up. But I think at some point here, the market has to consolidate. We've already seen some of that happening on the equity side. I think we're going to start seeing it here on the ETF and the spot market side. But essentially, most of the ETF inflows have really been retail dollars at this point. It's still, as an institution, a little bit hard to invest in these ETFs. And as anybody who maybe banks with B of A or some of these other large banks finds, you have to literally ask permission to almost buy these ETFs through the banks if you're using their brokerage account. So yeah, I think we're still early in the adoption cycle from the ETFs. I think over time, yes, it's going to take a while, but I think you're starting to see companies begin to evaluate it as a way to store cash. Your alternatives today are to put money into T-bills. You're going to get 5%, 5.5%, something like that. So what's the alternative? And Michael Saylor has for years been the advocate of taking corporate assets and putting them into Bitcoin. And while he has accumulated more Bitcoin than most companies would feel comfortable with, it certainly has worked out quite well for him. So I think it's really something that companies are going to evaluate. But it's not just companies, it's countries are also evaluating this. There are sovereigns who want to hold assets in Bitcoin. Why? Because it can't be controlled by another government. And having sovereignty over your assets is very important, especially as a commodity producer. So I think you're going to start seeing more countries holding small amounts of Bitcoin in their balance sheet as Bitcoin begins to continue to permeate the institutional investor base. And then you're going to see all sorts of derivative products that are Bitcoin related products. You'll see options, you'll see the funds that short Bitcoin versus go long Bitcoin. You'll see all sorts of different investment instruments that companies will be able to use to get exposure to Bitcoin without actually having to hold Bitcoin in a wallet. So I think the fact that it's now readily available with institutions, you could go to Fidelity and buy and sell Bitcoin, spot Bitcoin directly. You can use ETFs. You can use all sorts of different things that make it easy for corporations to hold it. Now with this new reporting, it's easy to report on.
And are there any technological innovations built on the Bitcoin layer 1 that may prompt people to hold more Bitcoin that you're looking out for?
Well, I think on layer 1, it's more about the fact that Bitcoin is the most secure place to store something.
Even nation states are coming for Bitcoin, and BlackRock's interference might have provided them the perfect platform. Today, the only nation state that has publicly declared Bitcoin legal tender is El Salvador.
Queda aprobada la ley de Bitcoin.
El Salvador just became the first country to make Bitcoin a legal currency.
In our worldview today, El Salvador has become the first country to adopt Bitcoin as legal tender.
Other nation states like Bhutan have been involved in mining it, but they've chosen to do so secretly. But now that there's an ETF, there is significantly less friction for nation states to use it as a reserve asset. Fred explains that while this hasn't begun in earnest, we're not too far away from it. Next, Fred reacts to Cathie Wood's $1.5 million per Bitcoin prediction. Sit back as we bring you more clips from the interview.
I would ask you to address or respond to Cathie Wood of ARK's predictions. She has updated her forecast a few months ago. She now sees $600,000 by 2030. That's the base case, perhaps 1.5 million. I think the assumption here is that Bitcoin will continue to advance alongside technological innovation. I think that's always been her underlying assumption here. Can you just address that forecast, whether or not it makes sense to you?
Well, if you think that Bitcoin historically has increased in value anywhere from 20 to 35% a year, kind of on average over the period of time, then, at 70,000 today going forward to 2030, you're looking at 6 years. Yeah, 30% a year appreciation. That's totally doable. Likely, and this is more really my personal belief, that Bitcoin really, if we look at the short term, will end this year somewhere between 50 and 100K. It's hard to tell. Next year, likely getting close to 200K, potentially, the high end. Otherwise, most certainly somewhere in the 125 to 150 range. Most probably. And then it's a question of, does the cycle repeat and you have a bit of a bear market, or are we done with historical cycles, and because of the ETFs and longer holding institutional interest in Bitcoin, do we start seeing less volatility? Again, most people think of Bitcoin and compare it to gold or other commodities. The key difference between Bitcoin and gold is that there's a finite supply. There's only 21 million Bitcoin. Arguably 4 million of that 21 million have been lost, and we still have yet to mine about 1 million of it. So you're talking about potentially 16 million Bitcoin that could be tradable on any given moment. Most Bitcoin sits off exchanges in cold wallets, hasn't moved in 6 to 9 months. Over half of Bitcoin hasn't moved in 5 years, all of which says at some price point that Bitcoin will move, of course. But I believe that with the finite amount, if you start seeing, 1% of 401k assets beginning to be allocated to this type of an asset class over the next, say, 5 to 10 years, there's not enough supply to provide that level of investment in Bitcoin without the price going up significantly. So I think all of the longer term indicators are that the price will go up. The question is by how much and how fast, and will there be profit taking and drops along the way? The one thing I think that is certain is while longer term volatility will decrease in the short term because of the amount of Bitcoin that's not on exchanges and the time it takes to get Bitcoin to exchanges from off-chain wallets, we'll see a lot of volatility in the price. Swings of 10% in a day will be normal fodder, I think.
Fred has just shared some of his long-term outlook on Bitcoin, and it explains why he's bullish. CEO and founder of Real Vision, Raoul Pal, has previously discussed this idea of allocating a small portion of 401ks into Bitcoin. Fred has now touched on the same thing, and he is also certain it will be quite significant. Fred has also reiterated that as institutional adoption grows, he expects prices to continue to climb. Next, he discusses the supply shock, the nearing halving, and what it could mean.
Well, I think you need to look at the supply shock. Right now, we have a demand shock because of the ETFs. That's what's been driving price up. As you get to, and that's a demand shock to the tune of about 2,000 Bitcoin a day. If you look at the halving, we're going to go from having 900 newly minted Bitcoin a day to 450 a day. So you're taking the total new emissions of Bitcoin, if you would. The total supply that is being newly introduced on a daily basis will go down by 50%. We'll go to 450 Bitcoin. In a day when typically 4,000 to 5,000 Bitcoin are trading hands, a decrease of 450 in new supply will likely have some impact on price, though it's hard to determine what it might be. So there's going to be a small supply shock. These halving events will have less impact on the price of Bitcoin over time as liquidity in the market for Bitcoin increases. So if 10,000, 15,000, 20,000 Bitcoin are trading hands a day, then that's very different than if only a couple thousand Bitcoin are changing a day, right? So it's very likely that what we'll see is there'll be some upwards pricing pressure on Bitcoin post-halving. And again, as I said earlier, when we were talking about price predictions, likely we'll end this year above the former all-time high, and then we'll see another run-up likely in 2025 as more adoption happens. But it's really the cycle post the peak, so post the next year peak, that will be different going forward. A question of institutional demand for Bitcoin, and how's that going to change? Will adoption continue at this current pace, in which case there will continue to be a deficit in available Bitcoin in the marketplace? So there'll be a continued demand shock, so price will go up. There'll be scarcity. In the event all of a sudden there is some major event that causes the price of Bitcoin to drop, you may see a supply glut, in which case you may see price decrement quickly. I think we're in unknown territory, and everybody is, I think many people are betting on the long term that yes, it's going to go up, so I'll keep investing. But people are kind of keeping their fingers crossed that something doesn't dramatically change negatively while they're making these investments. We're very optimistic about longer term opportunities with Bitcoin, and obviously what we're doing and how we're investing. And I think the rest of the industry is on a very similar track.
The Bitcoin spot ETFs have changed everything. Historically, Bitcoin prices usually skyrocket a full 6 months after the halving. Since the approval of the ETFs on the 11th of January, prices have been going higher and currently sit somewhere around 72,000 per coin. This phenomenon is strange, and Fred explains that the cycle has been permanently altered and might even be completely finished. He explains that unlike before, when the majority of crypto holders were retail, institutional entities are going to stay for the long run. This suggests that there will be much less action to the downside as these entities will hold. He's quick to warn that these are uncharted waters, but he's very optimistic overall. What do you think about Fried Thiel's analysis and insight? To see the latest in crypto news, watch this video here.